Welcome to Demystifying Tech, a business cloud podcast which examines the impact of technology on industry and wider society. In each episode, a technologist from one of the UK's most innovative companies will break down a key area of tech and offer practical takeaways for your business. In this episode, we are joined by two companies which featured in our FinTech 50 ranking who will offer their take on the state of UK FinTech. GFA Exchange uses AI to identify risk in B2B finance and has a clear mission around financial inclusion, while Collctiv simplifies the money collection and payment process. Welcome to both Joel Blake OBE and Pete Casson.
Hi, good morning. Good morning. Pleasure to be here this morning.
Fabulous.
Morning, John.
We've got two businesses here based in Birmingham and Manchester, and absolutely fascinated to hear how UK FinTech is important to the whole UK as well as London. And also, it's a pleasure to introduce my co-host, Zoe Clark from Tyto. Hi, Zoe. Hi
there. Great to be here. Thanks for having me.
So let's dive straight into it. So first of all, Joel, how does the GFA Exchange assess risk? Tell me a little bit about your business, your kind of reasons for founding the business, and also a little bit about that financial inclusion mission.
Yeah, sure. So in a former life, I co-founded an SME lending company. Literally sat in a pub with two friends, came up with the idea, applied for some funding, got the funding, and turned into a £10 million pot of funding over 5 years to fund SMEs. We funded about 700 companies across the UK before we found a bit of a niche that I wanted to scratch, because we could see that we were lending to great businesses, but there were so many that we say no to because they didn't fit our credit risk model. They didn't fit the pattern that we wanted to find within businesses that we wanted to fund. It was a great business, but I wanted to scratch that itch. So I exited the company to basically look at how technology could be used to democratize access to finance for all businesses, regardless of size, sector, founder, location, etc. And so it was really about trying to create a little bit more fairness within the risk process when it comes to lending. That's essentially why I left. I mean, prior to starting up that lending business, I'd spent 12 years as a diversity consultant as well. So I was kind of bringing those two worlds together, and if you like, the EDI and the finance piece. But the business was really about trying to find a very simple way to do that. So not be a lender ourselves, not be a credit risk, business ourselves, but to provide added value to those who are already lending. And so we essentially designed our own kind of AI scoring model, which sits within the heart of our technology. And we essentially benchmark and monitor the health of a business within a lender's loan book, because health is the one thing that all lenders want to find, a healthy growing business with the best potential for growth, regardless of the type of lender, whether it's a tier one high street bank, whether it's a new digital lender or whatever. They all want to find a healthy growing business. That's how they get their return. So we decided just to home in on that business health element in order to create the scalability in our business, if I'll be honest as well, which was about making sure we could be sector agnostic over time, but really focus on lending as our primary market. So yes, it was just really about trying to find a way of providing that financial inclusion. And we've been able to achieve that because every business that we monitor on behalf of our clients all come through the same door, so to speak. So they all get benchmarked in the same way. They all come through the system in the same way. They all get measured in the same way. But what we do is create a 3-digit score, which represents their health and performance. So think of it as an alternative credit risk model, if you like, focus purely on the health of a business. And that's what makes us different, and that also allows us to focus on inclusion.
Who are you sort of selling that product into? Who are who takes that credit risk model and then uses it to kind of decide whether to lend to a business?
But ironically, we now work with banks. Post-pandemic, in fact, we built the business just before the pandemic went to market in February 2020. COVID hit in March 2020. So we took the business off the commercial market and just spent the pandemic building the product out with the financial market as they were going through their disruption. And I think that was something that was really important for us, was to make sure that we're building a product that the market wants and validating that before we focus on commerciality. And that was our saving grace as a startup, launching in that time, because we came out of the pandemic with a commercially viable product and we became profitable in our first 6 months of actually trading as a fintech company. And our first client was a bank. And so from our perspective, banking is our primary, but because we are sector agnostic, we are having conversations within the investment and the wealth management space as well. And we'll just see how the future goes from there.
Okay, so we're going to get into the state of UK FinTech and delve a little more into the business as we go through. But I'd like to bring in Pete now. Now, Pete, you were CTO of Twinkle. I remember interviewing you a few years ago in Sheffield as part of a Sheffield Digital event. And about 2 years after that, maybe, I saw that you set up this new business with Amy Whittle. And Collctiv is it's a tool which simplifies the money collection process, doesn't it? So if you're ordering pizza with friends, or I don't know, getting cricket tickets or whatever it may be, it kind of simplifies that, being able to just pay without having to add loads of payment details, etc. Is that a fair description of the business?
It's exactly. It was born out of a real world problem. So Amy and I, as you mentioned, worked previously together at Twinkle, and Amy is the habitual organizer. She organizes everything and everyone without even kind of thinking about it. If someone's birthday is coming up, or if the team could do with meeting up and going out for a few drinks, or just going out for a social evening or whatever, then she is the one who would organize it and get it sorted. But what that means is that you take on quite a burden of admin and general organizing of those events. It's not simple bringing even 5 people together for an event, let alone 10, 15, 20 people. And those events cost money. So you need to collect money from people. You then need to pay for that event. And Amy was repeatedly out of pocket. There was a bunch of people who didn't have the cash at that point or whatever, or didn't go to the cash point to get that cash out to then give them the money for that event or that activity or present. So she had a bunch of IOUs that would never be fulfilled. So the amount of drinks, the amount of cash that Amy's owed is probably at least 4 figures. There's a couple of birthdays of gifts that she was hundreds of pounds out of that she contributed because people committed that amount but never physically gave her the money to do it. So essentially she got fed up and kind of sick and tired of being out of pocket, and we looked for a digital solution to try and make this easy. We thought this is back in 2018, 2019, and we're trying to think, and by now there must be a solution that allows you to do this. The kind of tech has moved on a bit. We've got Apple Pay, Google Pay, we've got those type of payment mechanisms. Is there anything that does it? And there just wasn't. We tried to prove that there was a solution so that we could kind of ignore the problem and just move on, but we couldn't. And we saw that there was a potential gap in the market for a solution that allows groups to contribute and come together and spend together. I mean, it's a bit different than the kind of, I can send you £10. That's really easy. That's really straightforward. But you don't know what that £10 for, how much you've got with other people that have contributed in. It get mixed in with your personal money. It's a real pain to administer. So we've created a solution that we don't care who you bank with. We're totally agnostic with that. People trying to get everyone using the same bank account is near impossible. Like trying to get all your mates on Monzo, for example. You're not going to get them to go sign up, go through a KYC process, go through, do all the checks and everything else, get a card, and then you can then send them £10. That just isn't going to happen. So we created a solution whereby only the organizer needs to be on our platform, and everyone else, as long as they've got some kind of card, whether it's debit or credit card, can then just contribute straight into that pot without having to sign up or anything. So the barrier to pay is taken away totally. So me as a contributor or someone that doesn't organize, I will attend and I'll pay. To be honest, I was just lazy. I couldn't be bothered to go to the cash point and get £10 out, even though it was just down the street. It was a barrier, it was a friction. But having to be able to just do it on my phone, I've got no excuses. Also, there's a little bit of peer pressure within your group as well, knowing that you can see people are paying into this, but it's like, okay, I need to contribute into this as well. So you've got that in there, and we've just tried to, as much as possible, remove the barriers for the organizer to get the job done, and actually so that they can enjoy the experience as opposed to it just being this admin overhead that they've got to manage.
So Amy's friends are all kind of, first in the pub, last to the bar. I should say actually that Amy was COO of Twinkle as well. So you guys were both in this massive ed tech company. Did you see yourself as a bit of an entrepreneur, before that, or did you just think, I'm the CTO and the guy in the background sort of like overseeing the tech? Was it an expected transition into founding a business?
I've always had a desire for probably about 10 or 15 years to found my own company. I just never found what it was going to be. And I spent all that time kind of looking for something to create and build, but I think the best businesses come out of real world situations and you see the opportunity rather than trying to forge something that probably just isn't there. So I always looked for the opportunity and the chance to create a business, and this kind of presented itself. And when we went out to try and disprove the fact that this needed to even exist and we couldn't, it kind of leapt out of kind of going, okay, maybe there is something here, maybe there's an opportunity here that we can jump on, and that we can kind of hopefully become first to market and kind of take the space as soon as possible on that. So I wouldn't necessarily say myself as an entrepreneur as such, but I am someone who I essentially kind of like a fixer. I see a problem and I try and sort it out. That's my remit. Regardless of whether it's in a sector I've been in before or not, I see a problem and kind of go, okay, what's the solution to try and sort this out? And being in tech now for about 20 odd years, my whole philosophy around technology is to make it invisible. So you shouldn't know you're using it. It should just get out of the way. It should aid you and enable you. It shouldn't be a hindrance. So that's kind of, and it's what we've taken into Collctiv as well, is trying to make the technology work for the person rather than trying to make it just a mechanism that you have to go through. It's just more of a natural experience.
Yeah.
We're going to Bulgaria for my brother-in-law's 40th birthday. He doesn't know about it, so hopefully he's not going to watch the YouTube video or listen to the podcast. But yeah, I need to get on Collctiv to organize that. Zoe, let me bring you in here. You're going to have loads of questions to ask these guests as the co-host. But first of all, just to introduce you a bit, you've got a long experience in B2B FinTech and financial services. Can you just give me a little flavor of some of the work that you've done?
Yeah, absolutely. Sure. Yeah, I'm always surprised when I sort of say to myself that, yeah, the term fintech, I don't feel old enough really to say that the term fintech didn't really exist when I started working in this field, which is a bit crazy, really. It was definitely, financial services and technology was when I started out in this sector. But yeah, over that last sort of 15, 20 years or so, I've worked with various startups, looking at sort of different factors of the fintech ecosystem, right through to large organizations. I used to work in-house at RBS as well as for various PR agencies as well. So I've seen it from various different aspects, let's say, but I suppose I am a communicator at heart. I'm not a technologist or a fintech expert. So I'm always interested to see firsthand with people who work directly in the sector. And I guess one thing I'm picking up from today is that it really seems at the moment, at least for both of you, that what you're both working on is really something that helps the end user directly. To me at the moment, it all seems to be about that you mentioned it, Pete, frictionless, removing that friction, tailoring offers, personalizing offers, things like that. I suppose I'd be quite interested as to where we go next with this chat, to dig into a bit more about how the fintech ecosystem has evolved over time, and think that, how do you see that? How do you see that things in fintech have changed over the years? Do you think we've moved away from more of the infrastructure challenges that maybe existed to get fintech innovation up and running to begin with, and now it's all more focusing on those kind of end user personalized sort of offerings and things, or is there still a lot to do on all aspects?
I think we're moving away from finance and moving towards tech. I think it's probably the best way of putting it, especially in the last decade. So it's still very much, fintech is still very much entrenched by the banks. They own the sector, they own what you do. They are the core of definitely the British banking sector, but pretty much obviously the global sector as well from fintech perspective. But what you are seeing now are the major tech companies engrossing into their markets and actually disrupting those markets. So you look at the likes of Apple, you see Google, you've got PayPal, you've got those organizations that are taking market share away from those banks. Now, if you look at Apple Pay, Apple is in a very, very powerful position, a very unique position to be able to control spending globally. And you see now that basically the number one way of paying, especially on e-commerce, is via wallets. And Apple Pay is kind of leading that way on that, and that whole frictionless experience. You no longer know which card you're using to pay. You don't care which card you're paying. You're just staring at your phone and then tapping it and then job done. The movement away from kind of the typical kind of Visa, MasterCard from that side of things is becoming a little bit grayer. And you're going to see tech companies, in particular the likes of Apple and Google with the mobile tech and everything else, and obviously X or Twitter, or kind of what it's called this week, is moving towards into the payment sector as well. Then you're going to see tech companies taking more control of payments in particular and banking in particular, then and probably innovate much, much faster than you're going to see the legacy banking institutions move. And you're seeing that already, and it'll be very, very interesting to see what those what the big banks do in order to keep up, really, in order to still remain relevant and not allow the likes of Apple or Google or even PayPal to kind of take over from them. If you look at, I mean, even just take Starbucks, for example, randomly, they wouldn't be in fintech. If you look at the cash that they have from their gift cards, they're the largest bank in the world. And that's incredible. The coffee shop is the largest bank in the world because of the gift cards that they use. So the way that we pay for things has changed. And if we're not careful, or if the banks aren't careful, then they're going to be left behind, and they are not going to be kind of the default way that we do payments in the future. It's going to be led by tech.
What sort of stage are we at with this kind of open finance revolution then? Because obviously open banking came along, connected up, various providers, like whereas, people like Joel and their company, his company, they can all connect that data in. But open finance is something different, isn't it? How do we define it? Who wants to come in on that one? Joel, here you go.
Yeah, cheers. What I find interesting about that side is because I'm looking at this as a non-technologist running a tech company. So I wasn't involved in the world of technology before starting this business. And so the way I've looked at it is things like open financing provides the opportunity to get better intelligence from the data that you get through those mediums. And so I completely agree with everything that Pete's absolutely said. And I think just to complement that, it's more for me about, okay, so what happens with the results of all these different innovations? So what happens with the data? What happens with the intelligence that you use? So I think things like open financing, open banking, all these innovations are great, but it's always going to be about actionable intelligence that you get from the results of using these types of mediums. And so for me, I'm seeing a convergence of three things effectively of kind of diversity in all its forms, data and digital technologies, or what we like to call in-house the 3D effect. Because if you're bringing wider diversity in terms of thinking, reducing bias in the design of technologies, if you're bringing new models, patterns, processes, and systems, that's got to relieve and release new data sets that are more diverse by nature, which then draws out more intelligence, more diverse intelligence about your markets, about suppliers, customers, whomever. Then you have the onslaught of innovative digital technologies that can take that intelligence into different places again. And I think that's just an interesting convergence that we're certainly seeing through our eyes, of which fintech has a massive part to play. But it also means the fintech technologies themselves have to be designed with these types of convergences and these changes in mind. And I think that's got to be one of the biggest challenges, historically, a challenge for what I've seen in terms of having that inclusivity within the design of fintech itself. And I see that being an ongoing issue that might actually, in some ways, halt the progress that fintech can actually create if it's not done in the right way.
So do you really think what we're seeing at the moment is just sort of the tip of the iceberg? Do you think there's a whole heap more we could be doing?
As someone who's relatively new into the space, been able to create something that's created a bit of a niche and a bit of a dent, and bringing a different view and perspective on that from the beginning, in terms of not coming from a technology background, coming from a how do you apply it, commercial, real kind of actionable approach to it. So yeah, I do think we're at the tip of an iceberg, and I just think things will be accelerated, but the technology itself needs to be designed in mind. And just historically, I've seen, especially from larger banking organizations, bias has been woven into the design of technology, which has then halted progress in some areas. And I just think where we are in the world now, with things like ESG as well, and the way in which social impact is coming into commercial strategy, that's going to change the way in which fintech is designed in the future.
I've seen a few.
I think there's...
Oh, sorry, Pete.
Yeah, I was just going to say, I think there's still a huge barrier to entry though in fintech. Like for a startup to get into fintech, you've got to raise some money, or you've got to be in, or you've got to know someone, or hope you can find those connections pretty sharpish. Because there is still that barrier. I mean, Joe, I don't know from your side working with the banks with B2B, but I dare say there's probably a ton of compliance and checks and everything else that you have to go
100%.
through. Yeah, exactly. In order to work with those guys. And it's great when those contracts land because they're the big deals, but those take 6 to 12 months probably to go through that sales cycles before. And so you've got to survive that period and actually get a product that's worked and is compliant and works with their old technology as well and all the rest of it and things. So there's huge barriers to entry, and it's interesting hearing from Joel's side, from the B2B perspective, because obviously we're much more consumer side of things, and hearing the whole open banking piece. We're constantly being pressured as a business, where we've had open banking kind of just thrown at us and kind of going, you need to adopt open banking, you need to adopt it, you need to adopt it. Just doesn't work for the consumer. Totally doesn't work for the consumer. It works brilliantly for businesses, and I can see exactly how it works fantastically for that environment. But paying as a consumer using open banking is an absolute nightmare. You've got no control over, as a B2C business, that experience where you want to try and make it as frictionless as possible. At the point where they hit, yeah, I want to pay via my bank, you lose that experience. And every bank is doing it in their own way. Some are good, most are pretty terrible. And you see huge drop-offs in conversion rates with regards to open banking. So open banking as a standard and as a concept is a very good idea. Its execution has been pretty poor, and it's feeling now like they're driving that in to make sure that it's not a failure as a thing, because the concept's right, and we're starting to see consumer level tech companies adopt it. And you've recently started seeing Apple adopt it in Apple Pay, for example, to be able to give you quick glances on your balance on your card without having to go into your banking app. As soon as Apple or Google adopt open banking as a payment mechanism for consumers, you'll see open banking rocket. And it will overnight, people, I think you'll see us adopt more of a European style where you're paying via your bank than rather your debit or credit card. But until that happens in Britain, we're still going to be paying via debit or credit card at the moment. And open banking is going to be a business only really solution that is great for that solution, but isn't built for the consumer at all.
Why do you think it's not built for the consumer? Can you give me a practical example of where that doesn't work for the consumer?
Yeah, so I think when it first came out a few years ago, you saw a influx of apps that would bring all of your banking accounts together. So you can got a nice kind of one single pane of glass. You can see a top-down view of those of your financial situation across all the bank accounts you've got. Those have pretty much disappeared now because all the banking apps have then caught up, and you can do that within most banking apps these days. But if I was to go on an e-commerce site and I've got a whole bunch of items in my basket that I want to pay for, I could tap pay with bank rather than pay with card. And what would happen is that would then bounce off to whatever bank that I'm using. Well, actually, I would have to choose who I'm banking with, and you have to be in the list, and you hope and pray that your bank is in that list that they've got a connection with. If you isn't, you can't pay with them. So that's the end of that. But if they are in that list, you then tap on that, that then bounces to the bank's site. You then, if you're on desktop, you're going to have to log in and go through that login process of online banking, which is pretty horrific on desktop. On mobile, it'll probably bounce to the app that hopefully you got on your phone. It will then go through and double check that the amount's obviously been paid. You go through and confirm it, go through a second form of authentication, which is like Face ID, Touch ID, that type of thing, or 6-digit code. Then it will then bounce you back to the website that you're then paying for, and then you'll then check out. The problem is that experience, say per bank, varies dramatically. The likes of Starling and Monzo, the more modern kind of neobanks, have done a pretty good job of that process. The older legacy banks have got some work to do, that they need to catch up. It's a pretty horrific process. We've done experiments testing that, and you see a huge drop off of people completing that journey when they're using open banking, because it's too many steps, too much friction, and it's not a smooth exercise. Paying with your card, it's just a doddle. It's just there. You just look at your phone and you're done. It needs to become that slick in order for people to really adopt it.
Yeah, I mean, the UK is kind of held up as this kind of bastion of fintech. The world, London is the fintech capital of the world. But what I'm hearing today a little bit is actually we've not got this right. Do you feel like, because you talk about this, the FCA, the regulatory sandbox they've got as well, but what have they not got right? What could they do better? How would you go about, for example, building a framework to actually get these inclusive businesses in there as well, so get inclusion into these products, but to actually build products that the consumer actually needs, at the user endpoint?
I say, Joel, I don't know about you. So I'll keep quiet in a minute. But there was the Khalifa review about 12 months ago or so, or maybe a couple of years ago, that has come out with a number of points, which hopefully with with CFIT, which is the new organization that is basically tasked with resolving the issues that are raised in the Khalifa review, that hopefully allow innovation in fintech to thrive and grow within the country. I hope and pray that they have real world tangible outcomes that actually make a significant difference, and hopefully encourage fintech to be outside of London as well, so that it grows nationally rather than just staying in the city, which is basically where everything is. Every deal you're doing, you're going down to the city to sort it out. That needs to change, and we need to remove from the central power and reliance on just London to using that kind of globally. So hopefully that will change. It does feel a little bit like the FCA are starting to engage and work out what they can do for startups to allow them to navigate the regulatory process. I think some banks are starting to see, okay, we need to innovate quick, and the only way we can do that is to basically either partner or acquire startups in order to do that, because they can't move fast enough with their technology. You're seeing banks spin up smaller neo banks that are agile and are smaller to do it. You see Barclays are doing it, Santander have got one as well. They're spinning up, they're not necessarily using their brands to do it, which is really interesting, but they're spinning up these smaller banks that are built on modern technology and allow them to innovate much, much faster. So I definitely think we're going to see that happening, and we just need to allow these conversations with the big organizations to happen, because we do have the capability of moving incredibly fast. We've got the modern technology, we've got the experience, we've got the desire, we've got the drive to do it. We just need the incumbents to open the door and allow us to work with them, and not put so much onerous kind of compliance and checks and everything else and burdens on us to make these things happen. I appreciate that they also need to de-risk the opportunities, but also they have to take a bit of a chance with what we're doing as well, because that's essentially what all the big tech companies are doing as well, and they're going to be left behind if they don't.
Yeah, you're absolutely right, Pete. And in fact, on the back of the Khalifa review, I know in our region here in Birmingham and the Midlands, we were selected as one of the emerging tech clusters out of the review. And so we've got our own kind of network now called Tech West Midlands, was Birmingham Tech at the time. And I remember being one of the founding directors of Birmingham Tech, and we tried to build this ecosystem to highlight the tech opportunities in the region. And now that's become Tech West Midlands, and we've uncovered our tech sector is worth about £15 billion. Within Tech West Midlands, there's over 5,000 member organisations and individuals, and our fintech scene is growing great guns. Yet on a global narrative scale, it's still the Southeast, London. Anything out of London really is the golden triangle of Cambridge, Oxford, and London. Birmingham is now beginning to do its thing. The Midlands is now beginning to do its thing. Northeast have had a great reputation for many years. So I think it's about really highlighting what's going on in regions and then using it as a global narrative. But there also needs to be an acceptance of the innovation and the wider thinking that entrepreneurs, startups can bring into these larger incumbent environments, because often there are barriers because change is still going to take forever and a day, right? It's still this kind of oil tanker syndrome with large organizations. And so even when they have the answers from the startup community, there is still often barriers to integrating that information, taking it in and doing something actionable with it. So yeah, I think just getting on the ground, better collaboration and investing in the future of the workforce, the future environments and not being afraid to go into high risk sectors too, because often that's where a lot of innovation lies. So yeah, totally agree. Collaboration is key.
Yeah, it's been great to see what Yanis Mayos.
Yeah,
is,
yeah.
Should I say Yanis Mayos MBE? So I'm pretty sure an OBE trumps an MBE. Is that right? So are you winning?
No competition, mate. We're all doing what we can in our own space. So that's not a bad.
But yes, so Yanis founded what is now Tech WM, right? So actually seeing those ecosystems develop. We were in Newcastle earlier this week with Tech Blast, our second brand. Doing a startup pitching competition, a little bit different to fintech, although there were fintechs in that, really early stage companies. And actually these ecosystems in different regions of the UK, they're very tight knit. People do an awful lot for each other and everyone works closely and collaboratively, but sometimes the investment isn't there. Are you guys seeing the kind of support for your relative ecosystems? And we're, based in Manchester and we do a lot of events in Manchester as well, so we know it well. But are you seeing the kind of the whether it's the wider support or just the investment side of things, are we missing a bit of a trick, or is London missing a bit of a trick?
I'll be honest with you, John. I can only speak for our region. I don't know how it is elsewhere, but we still have a massive investment problem when it comes to investing in growing startups. We kind of call it the muggy middle, between 500,000 to kind of £2.5–3 million of investment. That's our kind of muggy space where you can't get money for help, for it's so difficult. Whether it's lending or investment, it's still challenging. A lot of the investment is still held down in the southeast in the main. That being said, I think the mentality of the Midlands is very much, okay, fine, what have I got and what can I use? And I'm seeing that mentality, to be fair, across other regions too, where we're seeing greater collaborations and doing joint applications for funding or creating opportunities to bring in supply networks that enable you to reduce cost in your own business and so forth. And so we've seen a much more collaborative approach to plug the funding gaps that we see in our businesses. For fintech in particular, I think there's become an increasing interest in what's coming out of our region in terms of the opportunities. We're seeing much more collaboration with our fintechs and with corporate organizations, the larger incumbents. We are seeing much more things happening in that regard. But in terms of direct money and investment into businesses, it's still a challenge. And that challenge becomes even harder when you go into various different diversity characteristics as well.
I was just interested to know, in terms of this funding point and it being so tricky, obviously you've both recently ranked very highly within the FinTech 50. I'm just wondering what kind of importance you think the marketing and comms aspects have to help with that attracting funding.
Yeah, it definitely, going through the process, it definitely highlighted how important having, just being, even if people don't know you deeply or know you well, just having just people recognizing your name goes a long way. It breaks down that barrier. It kind of, in some ways, it's a bit like a warm intro. And it definitely reduces the initial conversation, and kind of people are more likely to look at your deck than not. So having good PR and good marketing has definitely been a strategy for us when we were going through our raising, is that we need to be seen a lot more, be a lot more visible. It is, I mean, also Joel, you've been through it yourself. Fundraising is a full-time job. You can't work in your business while you're fundraising. 2023 has been dire for fundraising. It's just been awful. The entire market has just stopped investing, which could mean that 24 is going to be great because there's a whole ton of money that needs to be deployed. We'll see. It'll be very, very interesting to see what happens, particularly obviously with the state of the cost of living and interest rates and everything else, whether or not the money does get deployed. And also funds are having a hard time raising their own money. So if they can't raise money, then there's nothing to deploy. So it's going to be interesting. But having, we had very fortunate circumstance where I was in America for 3 months at the start of the year. and being in their ecosystem and understanding how they do investment, and then seeing how basically it's the complete opposite to how we do it over here, and how we need to change in this country in our attitude to risk and investment, in order to really drive innovation. It's great to see that the angel scene in the UK has definitely improved. It's definitely become a much bigger area. People are much more willing to invest in startups and ideas. We need VCs really to kind of put the money where the mouth is, and to really start. You see VCs that are saying that they're early investors in businesses, and then you kind of go through the process. You're kind of like, okay, you're going to be involved at Series A. That's not early. There's a massive gap between seed and Series A, or pre-seed and Series A. That gap is survival, and you hope you make it, and you try and scrimp and scrape, and you save money where you can to try and get to Series A. And there's an abundance of VCs waiting for you to be involved at that point. But getting there is very, very hard, and even harder in fintech when you've got this barrier to entry on the rest of the market, and you need capital in order to do it. So hopefully the scene comes back in 24. There's definitely been a shift, particularly over the last few years, of you need to have a path to being profitable. You can't just grow at all costs and just have high revenue and huge costs. You need to be able to at least demonstrate you're going to be profitable pretty soon. That definitely started with, probably even started 2 or 3 years ago, just before the pandemic, where WeWork's IPO collapsed and people started getting really kind of fidgety on, okay, we need to see some substance in these businesses rather than just kind of some flashy revenue figures and it costing you 4 times the amount that you actually revenue you're getting, or whatever it is. So yeah, the scene's definitely changed. You'd need to be profitable soon, or at least have that path and have a realistic model to get in there pretty quickly. And you can't just burn money for the sake of it as well. So the idea of growth at all costs is definitely, I think, gone. Even in Silicon Valley, that's gone. So it's definitely much more of a how is your business sustainable? And you need to have an option of, actually, I don't need investment to grow. I need to, well, it may be growth slower if you're just doing it yourself, but being profitable quick then gives you control of your own destiny as well. So you need to think beyond just going speaking to VCs and kind of begging for money. You need to have an alternative plan.
Yeah.
Sorry, Joel, go on.
I was just going to say, just with marketing and comms, I think that has been, again, similar to Pete, crucial part of our growth strategy as a business. I'm not saying we've gone in for every single award under the sun, but we certainly have been tactical in terms of where we want to associate our brand as part of our growth plans. And what it has done for us, it's enabled us to really highlight our niche within a very competitive area, and given us the opportunity to use that as a platform to have the right type of conversations whilst doubling down on product. Because of, again, some of the reasons Pete said in terms of growth at all costs, it just doesn't work anymore. So, but being profitable is absolutely key, but taking a hit on your profits in return for really refining your product and really integrating customer feedback into the product design more than the need to be super profitable has been our kind of really focused, and PR and comms has helped us to do that because we know our niche, because we've been recognized for our niche. Doubling down on products in our niche is then creating a moat around our business. And so we know the larger profitability will come down the line, as long as we never forget that we're building a product to solve a problem. And if our customers are not our first port of call with understanding that problem, then we'll never achieve profitability at the levels that we know we will over time. So PR and comms has been marketing has been a massive part of making sure we get that balance right in terms of where we are in the market, how we're perceived, what we're delivering, but making sure we're continually developing a product that is meeting the direct need of our target market. Knowing that, at some point, the inflection point will come where this is a different conversation and we're in a different space. And we just work towards that point, and we know what that point is, and we will get there.
Amen to that. You sound like you'd be a great client to work with, to be honest. I mean, one of the competitive nature of the fintech scene, just necessitates that, real focus on finding a niche and communicating that well. That is what we talk to all of our fintech clients about, sure. And I think what sounds lovely about what you're saying is actually that you're recognizing the importance of doing that as a business, almost maybe a bit behind the scenes before you start going out there and shouting about everything on an external basis through PR, which of course you want to do as quickly as possible and start doing that. But if you don't get it right, first of all, get that kind of storytelling right, get that messaging right, understand across your business, across all of your senior teams, so you're all talking on the same sort of page, through the same red thread about how you tell your story and, you know, what your specific niche is versus everyone else who's out there. If you don't get that right internally first, then the external benefits won't be as great when they come.
Absolutely. I think what it also does, though, it attracts supporters and collaborators in ways and in areas that you didn't know as well. And that's been a huge benefit that we didn't really cater. I mean, obviously you always want that, but you don't, we certainly didn't cater for that as a strategic part of our plan. We would just hope that we would meet right partners and meet good collaborators at different points. But it's actually increasingly become something that's really helped to drive the value of our business in terms of who we've attracted to our board, the types of partnerships we've now created, and all towards this inflection point of change that we know is on the horizon. But we didn't expect that level of partnership and collaboration and support, but it was directly because of the marketing and PR and comms that enabled us to access that type of support as a very early fintech in the space.
I think that's fantastic. I mean, yeah, PR doesn't all have to be about you know, coverage on the page. A lot of it is, and rightly so. But yeah, that's absolutely right, that PR and comms should support on building out those networks and, you know, crafting your overall reputation as a company.
I think often what we found with a lot of the early stage companies, when we had this pitching competition in Newcastle, for example, and we've done similar ones in Manchester and elsewhere, until you've raised investment, quite a lot of the time you're quite invisible. People aren't aware of your company. You know, you're not on Crunchbase or PitchBook or wherever, and you don't have the, you know, you're working on your business or working in your business, should I say, and you're not telling that tale, you know, like you say, you're getting your product right. So you might, when it comes to that big client meeting, that potential flagship client or you know, that investor that could make a difference and provide that funding that you need to grow, actually, I can't find anything about this company. So it's a big, you know, like Pete said, you might not even, you know, get your sort of pitch looked at, your pitch deck looked at. Whereas if you've got that marketing and you're sort of turning those wheels already, you know, like, yeah, going on the FinTech 50, for example, it's not all about business card and the FinTech 50. But I know, Pete, I don't know if you can talk about this, Pete, and we'll be editing this podcast if you can't. You're going to be on a LinkedIn docu-series, or is that already aired?
It's already came out in October.
And I didn't watch it. I apologize. I'll seek it out. So that was specifically, was it UK FinTechs going in, or UK companies going into America? Is that right?
Featured it was
by LinkedIn.
Yeah, it was DFT was doing a LinkedIn series of British companies trying to break America, basically. And it was a series of, I remember, 6 companies were going through, and our kind of journey to trying to basically export our company to America, which we launched in America just over 12 months ago now, actually, and I've seen that grow tremendously over the past 12 months, and it's a really successful region for us. But it's been incredibly hard, as anyone who's tried to go to America, it can be a bit of a cesspit of where money just disappears, and it just gets burnt and you just get nothing in return, and you obviously have to treat America as each of the 50 different states. It's not one country. It's a bunch of smaller countries that you then have to approach differently, and then you've got regulatory issues against all those states, plus on a national level as well, on a state level, and on everything else. So it's difficult. It's really hard, and trying to break even to a small part of that country, one, can absolutely change your company overnight, but 2, can cost you an absolute fortune, and it's not easy to do. You need to set up American entities. You need to make sure, if you're going to get investment from America, do they want you to flip and become an American company overnight, or are you going to stay British? How are you going to do that? How are you going to sort out? How are you going to make sure that your UK investors, they still get all the benefits they need to as investors and everything else if you do need to flip to America? We haven't. Thankfully, we've got investors from the States that they didn't ask for us to flip to the US, thankfully. But yeah, that process was fantastic. I was also part of the Techstars program that we were a part of during actually this time last year. We'd just flown out to the US, to New York, for 3 months to spend as part of Techstars New York, which was an absolute whirlwind experience. One of the best parts, probably, of not just the collective journey, but my whole career, of experiencing that and being properly thrown in the deep end, and you either sink or swim. And it's, everyone is thrown at you. You get to meet some phenomenal people that you would never have met ever before. To the point where I have the phone number for the former director of Uber Eats, the guy who created Uber Eats, $30 billion business, is on my phone. You don't get those contacts usually. You just don't get that. And that's the type of accelerators that we need in this country. We're kind of starting to see that happen now, which is great. But it's not the money that those accelerators invest in you that's worth it, because it's actually quite expensive to do that. But it's the connections, it's the doors they open are far more valuable than any investment that they could give you. So yeah, it was an awesome experience to be out in the States and kind of live in New York, if that makes sense, for a bit, rather than just being the tourist to go to New York, and really understand what makes America tick, and in particular the East Coast, from that side of things. So yeah, it was a great kind of experience to be in on the show. A really interesting to go and see is kind of behind the scenes how it all works as well, which is kind of fascinating.
Yeah, Amy's, or your co-founder Amy's, not shy to say that you struggled to get onto the Techstars accelerator in London, so you had to go to New York.
Yeah,
it kind of paints the picture, doesn't it?
And that's it. It's a real shame, and that's a genuine real shame. We're a British business, and we want to be British, but we've had to fly 5,000 miles in order to get significant kind of traction and investment and everything else in order to do it, because it's just a better market out there for us anyway. And there are other sectors obviously that work brilliantly within the UK. But yeah, we applied to Techstars London twice, failed twice. Applied to Techstars New York on the last day of the application, on just kind of a bit like, yeah, let's give it a go. Got in, and I mean, there's 3 or 4 interviews past that kind of initial application process to get through, but to get into New York, and thinking about it, kind of afterwards, I don't think if we'd have gone to Techstars London, we'd have had the impact that we've got out of Techstars New York, if that makes sense. Because essentially we basically moved out to New York for that period of time, and I'm so thankful to my wife for looking after my children. I basically just ran away for 3 months, so forever in debt for her to looking after my kids and keeping everything ticking this side. But being down in if we were in London, for example, I probably would have just spent down the week down in London and back home during the weekends, that type of thing. So wouldn't necessarily been immersed, if that makes sense, in that culture. And really kind of on it 24/7. And it was that for 3 months. It was, you are working on the business 24/7, plus trying to have all these these network events and everything else, and trying to be a translator of British culture and American culture into Britain and everything else. So yeah, I was exhausted and a lot heavier after that 3 months.
They've got Mr. Bean in America. They know all about our culture. Fine. I didn't realize how southern I was until I went to America, and my proper full on. I mean, I live up north. I'll still say Bath and Path and Grass. I was born down south, grew up in Devon. So I went to America, and then just turbocharged my accent, just went completely British and very, very kind of Queen's English. It was terrible. Joel, you from Birmingham originally, or?
Yeah, mate.
I went to university in Birmingham, so I know all about the Brummie accent.
Yeah, I'm born and bred in Birmingham. It's funny because when I talk to other Brummies, I realise my accent isn't as broad as theirs. But anytime I come out of Birmingham, it's like, that's how Birmingham speak. I'm like, you've not really been to Birmingham, mate. You really
just play football in Wolverhampton, and that was an experience.
Yeah, there's a lot of rivalry for sure down here for football.
I think we need to kind of wrap it up by looking at the sort of challenges and opportunities for next year. So I know Pete's already said about hopefully some of that capital that's not flowing at the moment may be flowing. Joe, what do you kind of see as the challenges and opportunities for next year?
Well, it's interesting enough. We mentioned earlier about banking, and banking was always our first go to market. They've got the data, the volume, the scale. but we designed the business as a sector agnostic platform from the beginning. So challenge for us is just moving into adjacent markets, really. And we started a lot of that work earlier this year. We built some traction in some of those newer markets. So it's really just scale, really, and just building those collaborative partnerships in those newer areas. Our technology is robust, it's secure, we know it will deliver, we've generated revenue. So we're confident of what we have in the market. But it's about just making sure now we land it in these additional spaces and do it in the right time frame that we want to. We scale in the right way, and we work towards our kind of key KPIs within our business. As much as I would say I'm an entrepreneur now, I never really planned to be. I actually wanted to be an accountant when I was in school. Yeah, a whole different conversation.
That's a phrase I don't hear often. I wanted to be an accountant when I was in school.
So I'm very analytical about numbers generally. And so the kind of foundational side of my personality is very much, yeah, great, you could do all the fancy entrepreneurial stuff, but what do the numbers say? I'm driven by the kind of the performance and the KPIs and make sure we deliver. So just making sure we balance that with our strategies moving forward. So that's going to probably be our challenge. I think also as well, it's just building out our team. I built the business on a very, very lean operation on purpose. I wanted to make sure we had a product that could really bang in the market. We're doing that. So it's just building out the team, really, just to kind of, again, build out some of that robustness around myself and on our existing team. But getting good talent is always difficult. And I'm sure as Pete and the rest of you have all seen, getting access to good talent is one thing, retaining great talent is another. And so just making sure that we're finding good people to bring into the business is got to be important. And finally, it's always capital. We are looking to raise ourselves from the new year in terms of moving to our next stage of growth. So, I'm preparing for that full-time job of doing that from my angle. But I'm very confident about what we have. And I know that if we don't, we can still deliver a great business. We just want to deliver an even greater business with the right type of support. So raising capital is going to be part of that journey for us as well.
So Pete, you're going to have another 3-month holiday in New York, no doubt.
Yeah, I would love to have
unlike your long-suffering wife. But what challenges and opportunities do you see for your business or the wider sector next year?
Yeah, we've moved towards a path to being profitable on that side of things, and not reliant on investment to do that, and we're achieving that, which is great. So we need to obviously continue that path. One of the main things for us is around our culture, making sure that as we grow and scale, the culture stays tight. We talked about the marketing earlier on, and our marketing really is an extension of our culture, of what we do internally, and we're kind of just showing everyone what our culture is publicly from that side of things, and we interview based on that culture as well to make sure that they're a good fit in the business as well within that. So that's obviously a big challenge for us. We're launching a bunch of new products as well very, very soon for the B2B sector to allow group payments for B2B as well. So those challenges of growing that side of the part of the business along there, we've got a few big names hopefully that'll be using us pretty soon. So there's all these challenges, as you know, as growing as a business and stuff, and you start working with the bigger players. They obviously bring unique challenges and opportunities as well that you need to kind of grab hold of and run with. So that'll be the big thing for us. Post Christmas, we've obviously got, this is one of our peak seasons right now, a kind of end of term where everyone's kind of supporting all the teachers and getting teacher gifts and stuff, all the parents and things such as that, and Christmas parties and everyone booking holidays and stuff like that. That tends to be happening right about now. So post that, then yeah, the new year is there's a lot going on, and it tends to be that January is our quiet month, but I can't see it being quiet for us this year. There's so much that we've got going on that it's exciting. There's a lot going on. We just need to make sure we scale well over the next kind of 12-18 months.
What do you see for next year, Zoe, like on a more macro level?
Yeah, I mean, I think we're all crystal clear about the macro context in which we're, all sitting, all the various global challenges we're all facing. So probably don't need to say too much about that. There's some obvious challenges, aren't there, that we're all facing. But I think it's exciting times. I think among, at difficult times, often that's when the biggest innovations come through. So who knows what we're going to see next year and how it's going to go. Personally, at Tyto, it's exciting times for us because we have actually I've actually just returned to the business after a year out on maternity leave, and I come back to find the business ever bigger than it was before, with Tyto having acquired 2 small organisations while I've been away in the last year. So we now actually cover 7 countries around Europe. So the exciting thing for us is to bed in our new team members in different parts of the world and different parts of Europe, and look to sort of expand out our offering in those markets as well. Of course, at the same time as supporting all our existing clients on what they would like to achieve next year. Obviously, it's that kind of turn of the year time where we're thinking about, what should our plans and ambitions be for 2024. So that's what's on the cards for us.
I mean, Tyto does all kinds of interesting things. You've got the Tyto Tech 500. Very kindly, I was among the 50 most influential people in UK tech. Thank you. Based on data, apparently. But yeah, no, it's a great organisation. It's not just about
we take
doing our press releases, is it? Right? You take that time to do that research and to produce those products.
Exactly. Yeah, we take quite a thoughtful approach to PR and comms. I mean, just as Joel was saying earlier, we like to start with sort of thinking about what the business needs internally. What is the actual business objective that our clients are actually looking to achieve, and then we design the PR and comms strategy around that, so that to try and make it as measurable as possible. We love getting clients top tier, top level coverage in lots of different types of publications, but we're very much not about just PR for PR's sake or coverage for coverage sake. There's a real aim and ambition behind it. And yeah, in that sense, we also take quite a data-driven approach. So you mentioned the Tyto Tech 500, which is a ranking of who we see as the most influential people in tech in each different country. And we do that each year. And it's based on a very robust methodology, rather than it being subjective. It's all algorithm driven. And yeah, we've just launched this year, so you can find out more about that for sure on our website. And John, you're obviously very highly ranked up there, so well done on that this year.
Thank you very much. Pete, where can we watch the the LinkedIn docu-series? Is that available?
Yeah, it is. It's on LinkedIn, and it's also on I think it's on our LinkedIn page as well, and on our website. We've got a link in there under our blog. But yeah, feel free. It's free to watch on anyone. You just need it. It's on YouTube as well, if I remember correctly.
Brilliant, fabulous. That's my weekend sorted. Listen, it's been an absolute pleasure. We've run out of time. I think we've talked so much about this, the state of UK FinTech, where it's going, the challenges. I think it's important to have these honest conversations, not just to say, UK FinTech is great. Look at the investment, from 2 years ago. Actually, there's a practical thing here where we're looking at companies that are scaling, companies that are trying to work with incumbent players, like Joel trying to work with the banks. And I think, it's really important to kind of embrace that innovation that's coming from the grassroots, for want of a better word. So yeah, thanks ever so much, guys.
Yeah, thank you.
Thank you.
Yeah, thanks very much.
If you've got any feedback on today's episode, scribble it down on LinkedIn, X, or YouTube, or drop us an email at podcasts@businesscloud.co.uk. If you enjoyed the episode and found it useful, please like and subscribe on your preferred podcast platform to be among the first to hear insights from renowned UK technologists and entrepreneurs. Thanks for listening, and see you soon. Demystifying Tech is a Business Cloud podcast produced in partnership with pan-European B2B tech, PR and communications agency Tyto. New episodes are streamed on Business Cloud's YouTube, LinkedIn and Twitter pages from 12 PM on the second Friday of every month, while you can find all episodes on YouTube and all major audio podcast platforms. Subscribe now so you never miss an episode.